The Index podcast is brought to you by our staking partner, Marinade Finance. Their latest release, Marinade Select, offers a smarter way to stake, featuring a curated set of high-performing mid-size validators handpicked for yield, professionalism, and their role in making Solana faster and more resilient. Learn more and start staking at marinade.finance. Hey everybody, welcome to The Index. I'm your host, Alex Kehaya, and today I'm joined by Joe Kelly, CEO of Unchained. They are a Bitcoin financial services platform helping people to manage their wealth with a multisig custody solution. Joe, thanks for coming on the show.
Stoked to be here.
I want to dig into what Unchained is. Before that, just tell me a little bit about what gets you out of bed in the morning to build Unchained and to work in this space.
Yeah, I think I'm someone I've always been attracted to the frontiers of things. And when we started Unchained 8 years ago, Bitcoin, I mean, this whole industry still felt very much a frontier market. And my co-founder and I both just observed that there were not people really treating, I think, Bitcoin holders like a new market of clients, of people who need solutions. And people were starting blockchain companies for X back then, but the number one blockchain user back then, and still somewhat, I don't know the exact populations, were Bitcoin holders. So I think really building a professional financial services company for that community has been what's kind of driven us, and that and those are carefully chosen words, because I think that there's a lot of unprofessional ways to go about building any company in any industry, but I think especially financial services and these kind of trust-based products, even on top of a trustless system like Bitcoin, you're just navigating new territory, and so it's really important to build a quality company with great people.
What was your first exposure to Bitcoin? Like, how did you even get interested in it to begin with?
Well, my co-founder here, he and I were co-founders of a company in data analytics that we sold in 2013, and he's more of the technology co-founder here, and so he was already learning about and interested in Bitcoin, and that previous business was in the big data era, where distributed systems were part of how companies like Google and Facebook had to scale up. They used these databases that ran on multiple machines. And so there's a lot of problems there that were similar to what Bitcoin and blockchains had to solve in terms of how do these different machines maintain data consistency and talk to each other. So he was great at really technically understanding it. And then what I brought was kind of more of an investor mindset, kind of a product building mindset. And you looked at what to offer for this community, and we started with Bitcoin-backed loans, seeing that in 2016-17, no one was really doing that. Then we thought kind of naively that maybe custody was a solved problem, exchange and buy and sell was a solved problem, so go where there's something new. And then observing that almost all private wealth management solutions involve some form of lending or asset-based lending, so figuring that was a great place to start to build the brand around.
That's amazing. Yeah. And it's interesting you brought up, like, you would just assume that custody is kind of taken care of, but it's still, I mean, even to this day, there are some really good custody platforms, but it's still kind of complicated in a lot of ways for a lot of people. And the market is still, even as far as we've come, it still feels really new. I'm still talking to people every day who I'm having to educate on things like simple custody concepts, not even something as complex as, a multisig wallet in cold storage,
Yeah.
How do you think about that? Yeah. What's your view on like where you started and where we've come?
Yeah, it's a massive education gap. I think it's really neat though that this challenge of securing wealth, digital wealth, safely. I think that's driving a lot of innovation around just like the consumer adoption and consumerization of cryptography and key material. So I'm bullish that like overall through just like device manufacturers, whether it's Ledger or Satoshi Labs and their Trezor devices, that these are things that will become future platforms for a lot of their applications and things that need real human authentication into like the digital, wild web, and going to be full of bots and agents here quite soon. So yeah, I think that it's sort of a learning curve that I think modern just humankind is going to have to kind of come up on our own somewhat, but it also behooves entrepreneurs and builders to continue to design and create solutions that like also make it easier. So it's kind of this two-part race, I feel like, on both education and tools.
So one thing that caught my eye too about you guys is how early you were with lending and with things like IRAs, right? Like enabling people to hold Bitcoin in an IRA.
Yeah.
And it's I don't come from your space, like financial services is not my thing, but I think what's interesting, and I don't mean this to sound the wrong way, like it's kind of boring, right? Like financial services is kind of boring.
Totally.
It's a great business. It's an amazing business, and it's simple. But there was a problem, which is like Bitcoin holders didn't have access to this stuff, and I think people have gotten much more familiar with like the choke point 2.0 thing and like how people were getting debanked. And yeah, you couldn't get a loan with any crypto, not to mention Bitcoin, which is the biggest and most secure, and stable one.
Yeah.
And you guys, so I'm really curious to hear, to the extent you can talk about it, like how did you guys even accomplish this? What are we? We're in 2025, like 10 years ahead of where we are today. Like, and I don't know when each of these products launched or shipped, like the things you have listed now, but it just seems like, a lot of foresight and a lot of grit from what, I've been in the industry since 2016 as well, to like actually ship those products, and a lot of risk because of the regulatory uncertainty until literally like this year. Can you just tell me about that story and those products specifically, like lending and IRAs, and how that kind of came about and some of the stuff you had to deal with to even create that product in the first place? Yeah,
absolutely. I mean, so much of that's at the heart of the story and like the challenge of Unchained. And you mentioned grit. Certainly that's really important. I think that what was nice, I think, and even to your point about your personal experience, not being a financial services person necessarily. I wasn't, certainly before Unchained. So I spent a lot of the first, months and a year or two reading a lot of like literal statutes, or just like, what does the Consumer Financial Protection Bureau say about this? What is a money services business according to FinCEN and these things? So there was a lot of a learning curve, but it was nice, I think, to approach that with fresh eyes, because my co-founder and I could benefit from that ignorance of like, well, sure, obviously Bitcoin is just great collateral. It's perfect. Like you have it. As long as you have it, you can dispose of it. You can sell it into a global liquid marketplace, and how to market to market all the time. Isn't this so clearly superior as collateral than all the real estate, all the home mortgages, all the stuff that is just a massive lending market? And so that's that gift of ignorance. Now 8 years later, I'd have a lot more to say about just how credit markets function, how capital markets function, because even then our hypothesis was, surely markets are rational. Investors will come to see this as also great collateral. These should be the cheapest loans you can get. They should be at or even better than like margin loans in a securities portfolio, kind of a loan. So yeah, I think it's that ignorance, it's that grit, and just kind of walking the tree. The best part of our business has been so far, like we've talked about and established, like we know who our customers are. They're long-term Bitcoin holders. So as far as that hasn't had to pivot, or we're not like
which is amazing when you think about it, because if you have long-term Bitcoin holders like custodying with you so they can get access to some of these beneficial financial products, like super sticky.
Yeah.
They're never selling. They're literally never selling. So you guys just get to grow with the market that way.
Totally. We get to watch our clients get wealthier and like do more for them, with them. It's a fantastic position. And so being able to have that North Star beyond this wave with all of us that Bitcoin is and represents, and trying to merge through these challenges, the kind of Bitcoin template for financial services, or what kind of like, I don't know, almost treating Bitcoin as an entity or a thing, like what does it want and need for secure financial services versus like what does the now like governmental system, society, like just sort of norms and standards around how trusts or lending arrangements or IRAs kind of function. And so we're always kind of right at that intersection. Obviously, a lot of people describe themselves as a bridge between these worlds, but I think that Unchained helps, because there's even ways the centralized custodians, because of how they operate, they kind of mask even further like what is more of a Bitcoin native experience. And so the experience of our clients are that they get to hold keys with us in every product they use, and those keys really kind of ground them in the native system. For our vault users, so
they have their own keys, like their own private keys. They still self custody, right, even though they're using it's your custody solution. You have like a non-custodial setup actually in some ways.
Correct. Yeah.
I was going to ask about that because Bitcoiners are hardcore about that. I mean, a lot of them are, right? And so I was really curious how you had that set up. Is it like an MPC wallet type technology, or how is it built?
It's using native multisig in Bitcoin. And the beautiful thing is mean, talking about, standing on the shoulders of giants and like prior tools, but like we interoperate with the Trezor, Ledger, Cold Card, and soon some other wallets will come into official support. But that's 80% of the market there, at least of hardware wallet users. And so we help secure over 100,000 Bitcoin. At least 80% of that is held in a format where the client holds two keys. So they're using one or several different hardware device manufacturers. We're holding a third key. And so unlike a Chase or even a Coinbase, it's like when you go to withdraw from a Coinbase, that's a Coinbase controlled flow. When a client wants to withdraw their Bitcoin from their vault here, they can use our website, or they can use any other open source wallet for Multisig. There's Sparrow, we publish an open source one that's web-based.
Fantastic.
So there's kind of a sovereign recovery backdoor, that people could.
Yeah, this is actually how Squads is built too. On Solana. I don't know if you know the Squads team at all, but they're like a stable coin. I kind of think of them as like a stable coin platform, but they have a big multi-sig part of their business, and you think about them as like a platform for building like a new type of non-banking system. Any kind of fintech application can be built on top of Squads and their APIs and stuff.
Yeah.
But they have, early on, most of their traction was custody through a non-custodial solution like Multisig thing that supports all the hardware wallets, and for Solana and like SPL tokens. And the product's amazing, and they have an open source version of it that basically, it's there to ensure that you can always easily it's not easy for a non-technical person, but like fairly easily, if you have the will and a little bit of resources, you can get it spun up and use it on your own.
And I'd say, and to characterize, that's a lot of how we earn client relationships, we earn trust is in some of that education, some of the hand holding through, and like our onboardings with clients, we'll walk them through setting up the vault. They're trying to transfer stuff somewhere else and they want assistance, we can do that. But then we always show them how sovereign recovery works, or how you can use these open source tools, and how you're really getting kind of a more Bitcoin native experience. But then that has to couple, or like back to the financial service idea, like to the point of like a Squads or any of these kind of platform things doing multi-sig. That's only features and function. But we also live especially in the US, in a financial system that operates through like PDFs and like state level registrations of things, and or like a legal and judicial system that is there when someone dies, and now there's like assets that need to get directed somewhere, and then even bring it to like our IRA product. We'll give an example. So, in just company history, we had a loan product first. We developed the custody for that, for the collateral. We then shifted to opening that custody up so anyone could use it for their own vaults. And then we started to see that people, in creating these vaults, that they wanted to be sovereign, hold their own keys, that you need like a labeling system. You need something like the government or other people understands, that gives you PDF statements that say, if I'm claiming this Joe Kelly LLC here has 10 Bitcoin, how do I go tell that to somebody, my attorney, my accountant? All right, just like you want to log into something, they print off a PDF and give it to them. You can't just like give them a Bitcoin address or two. That doesn't make it very useful for them. So take that though up to instances like for an IRA. IRAs have to work such that there's reporting on the in-out of the IRA. Because there are like legal limits on those things. There's things that if you're outside of the bands, like you disqualify that IRA, or you're now subject to tax. So getting that kind of reporting on those flows, that's required by a financial institution. But in the read of those things, it doesn't require that institution necessarily has that like full control, and like that they can block or impede the movement of those funds. They just have to be able to monitor it. And so that's a kind of a beautiful natural application for this format of multi-sig, where for our IRA clients, they have two keys. We have one. It's a 2 to 3 multi-sig. They could move their funds out of their IRA at all times, but we have very strong cryptographic proof in knowledge, perfect knowledge at all times of the balance of those addresses associated with that IRA. And so we can trip, if they trip a wire on like some inbound or outbound or things like that, that's something we can report, and then we report on the normal in-out kinds of things too. So that's just that's necessary for it to be in that tax-protected IRA status, but it's not necessary for us to like control the funds or
right.
have that level of counterparty risk for them.
Right. Yeah. And since that's unique infrastructure that you had to build to make that possible, to read that data and make sure it's like automated with the reporting and all that stuff. So
yes,
and I bet that's like things that you don't even have in the traditional world for IRAs in a lot of cases. They don't have nearly the level of automation.
One of the smoothest IRA experiences probably out there through onboarding on the flows. Because and actually most of the complexity, I mean, Bitcoin's almost still just way simpler than the fiat system. Just these rollovers and transfers from other IRA institutions. Like that's honestly where our team spends like most of their time, just on an operational staff perspective of how is Fidelity or some trust company in Missouri, or how are these other IRA providers communicating with us, and then when our shared clients are like rolling over funds or moving an account over to us, like that whole back office system is very inefficient and non-standardized.
Yeah.
There are some standards for it, but not everybody uses them, kind of thing.
So how do you think about your business in relation to some of these other top tier tokens like Solana and ETH? I mean, it makes sense to have a focus on Bitcoin for obvious reasons, but personally, I like Solana. I've worked in the Solana ecosystem for a long time, and I like ETH too. And we're seeing more traditional financial things happening, like these digital asset treasury companies, ETFs, stuff like that. And so I do feel like those tokens are going mainstream and have staying power. Do you guys have any plans to add services for those assets as well? Because they could probably use it. I mean, I don't think the profile for lending would be the same necessarily, but for an IRA account or something like that, it's just another asset you could hold. What are your thoughts on that?
I mean, so one experience we have is we did support Ethereum for about a year as loan collateral from like early 2018 through some of 19. It wasn't. It was sort of a failed experiment for us, and in that, like, at least in that era, the technology was pretty unstable to run your own Ethereum node, and so to try to be kind of as like hardcore. Especially in very clean multisig, just this kind of multi-party key holding scenario. That was just rough for go for our already resource constrained engineering team. Plus, it was never greater than a couple percent of our loan book. It was not dominant behavior. Maybe the lending profile is different. It's also a market where there's like Maker or these other solutions people might.
Right. There's no DeFi for well, there hasn't been. There is coming, I think, for Bitcoin, but since you guys have been in market, there's just no other options. So that makes sense.
And it's kind of like where are the customers too? Because I think that for those people that might be like more DeFi native, just in their practice and like their comfort and what they're used to, like that's really not Unchained customers. Our clients, they're kind of more real world native. They're doctors, attorneys, or like dentists and commercial real estate people and for them, and some of this airs into philosophy, because I'd say the argument of our personal experience, resource constraints, and just like kind of customer demographic is one sort of principal business area. I think philosophically, Bitcoin somewhat it's just the most money-like of them. And so that money, that connection to a financial services business model and people's problems around money, I don't dispute that these are otherwise all like investable assets or things that people would hold for the purpose of investment returns or participation in an ecosystem. But I'm personally also just quite ignorant about most of the trade-offs, and I think it's cool that these things have thrived and people build interesting things in them. But we have enough of a market and like enough of our focus.
And when your head's down, like you're just not paying attention. I mean, this is how it's been for me with Solana, like the last like 5 years. Not because I don't like those things, the other things outside of Solana. It's just I've been so damn busy.
These things are complex enough on their own.
Yeah, like I'm having to go so deep, on that one thing. So I'm curious. I kind of want to hear a founder story. Like, and I've been through these time periods myself, which is why I'm kind of asking, like, what's the hardest thing that you can talk about that you guys have been through as a company? Like, where you nearly broke, or things almost fell apart, or like, something like, what's the most challenging thing you guys have been through as a team? And kind of how did you dig yourselves out of it? It usually happens at least once.
Yeah.
If not daily.
Oh gosh. I mean, there's multiple of them. I mean, we've been through probably 3, I think, bear market cycles here. Each of those has its own source of pain. March 2020 was particularly tough. We liquidated a lot of our loan book at that time. We've never had a loan loss, but part of that's because, at least in those periods where there was a big drop in Bitcoin, unfortunately, client collateral was sold. So those are painful for us, painful for our clients and everyone. I'd say a lot of the journey in a startup, we're now 140 people. And so for me, this is the biggest company I've run. What comes with that in just the forms of personalities, Bitcoin is a place of a lot of passionate people as well. And so keeping the common vision of like, what are we building? What is true to Bitcoin versus what are like, just fair and pragmatic compromises we have to make to have, a robust solution for the right people we want as clients. That's just a constant thing. I think what's helped us is like getting to some sort of set of common principles. Like examples, we treat Bitcoin as our common purpose. That's our company value or principle statements internally. And that was in place for a couple of years. And then I'd say, when 22 happened, that was a rough bear market for everybody. We actually did pretty well by the end of it, or just in the wake of like FTX and BlockFi failing. People were now much more custody conscious. That counterparty risk had a new visceral meaning to them, and so finding custody platforms that are non-custodial, that don't have that same risk, was important to people. So it just became really important. We actually started charging for accounts. We started kind of paying a lot more attention to like Unchained as business. I think kind of for a couple of years there, we and a lot of us could have been more caught up in the like, we're here for Bitcoin, man. Like the community, like let's all let's invest in sponsorships. Let's do a lot of these things. And we raised venture capital, so we could spend on some of that. But we were just we were very burn heavy, and we weren't like really paying enough attention to the business and like really good, robust monetization. So like we add the corollary now. Bitcoin is our common purpose, and it's not our only purpose. We are also a for-profit enterprise led by co-founders. Like there's just kind of, I think, really just finding those cultural adjustments when you have as mission-oriented and passionate of a core team, and how to keep as many of those people along for the ride for as long as possible and continue to like paint the picture for all of us. So that's been more the most like personal turbulence, and just like otherwise turbulence is just, and we care a lot about people here too.
Well, first of all, congratulations. I mean, the 140 people is a lot of people to employ and, put food on their table and give meaningful work to. Like, that's super cool and something to be really proud of, in my opinion. And
thanks. Yeah.
I think I resonate with that idea of like, and it might sound weird to people to say, the idea of like, not focusing on the monetization of the business or like the business itself, because a lot of us, I personally care about open source software. And then we started talking about this at the beginning before we got on the show, and that's my legacy to the world. And for a lot of us, these networks that we're working on, whether it's the Bitcoin network or Solana or Ethereum, they run on open source software, and we care about the ecosystem and like the big vision that everybody has bought into about what it means, what Bitcoin means, like self-custody, the idea of self-custody, of self-sovereignty, of freedom that comes with that, and ownership, and like the access to internet capital markets, which is like the big narrative of Solana. And you can get really easily caught up in just running around building that vision at your own expense. It can happen when you're that big of a believer in it. And then you wake up and you're like, I have to pay people like engineers to do stuff. We gotta charge people money for this stuff. At the end of the day, you are building businesses, but it's possible. And I think one of the things that I love about crypto is just how many open source companies it started. Like your company, I consider as an open source company. Like not that all of your stuff is open source, but you have a bunch of things that you contributed, like the Multisig thing, the self-hosted Multisig wallet. But you're also built a services company on top of open source software, very similar to how like Red Hat built a services company on top of Linux. It's just like a lot of people don't understand that, and they think like even some like RPC companies I've talked to in the Solana ecosystem, like they don't even realize they're an open source company. Like, yes, you offer a service hosting RPC nodes for people. That is an open source company, and so it's given birth to. There were already some that were successful, but it's given birth to like all thousands of companies that are literally just open source software companies now and services companies. That's all they are. It's cool.
Yes. It's a great ecosystem, provides a lot of incentive alignment, make the value of Bitcoin go up, make it more useful, educate, bring more people into it. It's a wonderful economic system.
So tell me about the Bitcoin Legacy Project. That's something we haven't talked about that I wanted to learn more about.
Yeah. So I think speaking about investing back in ecosystems, this was, I think, then the later step in maturity for how do we think about our community investments back into Bitcoin beyond just being a business. And so we have done, like we have a co-working space that was formerly run by us called Bitcoin Commons here in Austin, downtown.
Oh, cool.
Our building, it's where like some podcasters like Marty Bent, his studio is there, has been there. A couple other Bitcoin companies all work out of there. And We also have Pleb Labs. There's like two spaces in town that are great and just down the hall from us. So things like that where we're helping subsidize or support a space like that. It's Bitcoin Commons is now Bitcoin Park. We support a couple open source projects. We donate to mempool.space. We have interns we brought in to work on the open source wallet stuff that we do. So there's just all these ways that we had these like diverse investments in projects and things that around Bitcoin that we care about. That the Bitcoin Legacy Project was just one way to kind of really wrap the budget for that. Also open it up more to like grants and proposals from others to that are doing something interesting. So yeah, there's just, I think that's one core way to kind of invest back in that very, very top line growth for Bitcoin overall. And it comes into education, software development. And we have, even speaking of these kinds of products that mix something Bitcoin native and financial services, we have something, if you've heard of a DAF, or Donor Advised Fund, a vehicle for putting in, what you intend to donate, the assets, maybe they're stocks. In this case, we're talking about Bitcoin. You put that in the DAF in 1 year and you get all the write-off that year, but you can donate from that DAF in future years. So the value of maybe what you invested into it can continue to accrete. And so we have a partnership where a DAF sponsor, they hold a key, Unchained holds a key, and the client, the original donor moves it in, holds a third key. They can't control it. That's why they don't get to hold two, but they get to have transparency. They get to put it in a Bitcoin native sort of format, then donate to their church or causes or open source like core development in the Bitcoin protocol. So that's been a really successful platform for us. And so I think just overall kind of creating this awareness and ways that people can get back on their own and their own volition, that's also kind of part of the mission for the Bitcoin Legacy Project.
Awesome. So we're at the top of the show, and I always ask the same question, but what have I not asked you that I should have asked or that you want to talk about?
Yeah, I think a lot's there. I think just that, I think one of the beautiful things about having that North Star, this vision and these clients and like knowing who the customers are, I think that's just something that always resonates. And when I reflect on our story and for, I think, just other builders and entrepreneurs, just keeping that customer in mind. I think that, and that's even my worry with a lot of these treasury companies or otherwise, just kind of where the financialization is going. It's just kind of that I joke like that. Have you read that or seen that book, Where the Customer's Yachts?
Yeah.
I'm kind of like, where are the customers' Bitcoins? Where's like, just kind of, I'm still educating myself on just like how I feel about those developments in the market. Because
well, I think for Bitcoin and for ETH and for Sol, the benefits are largely the same. I think that, for ETH and Sol and Bitcoin, for example, like one, I think it creates a honey hole for those assets, which is good. Like long-term holders are better than short-term holders, in my opinion. Yeah. And then, it serves as a vehicle to educate everyone, like all the outside of crypto Twitter, right? So like every board member of every publicly traded company right now is probably talking about like a Bitcoin strategy, and soon an ETH and soon a Sol strategy. And so I think getting mainstream adoption and also institutional adoption in a big way, this is going to be a driving force for it. Yeah. And then the last one, for the teams that do it right, and I think that there are going to be very few that do this third thing, which is actually contribute back to the ecosystems and build things that matter with the resources that they accumulate. Because a lot of these, there have been some that are, or I would say, venture to say a lot of them that are like quick sugar high type ventures, right? Like where they're just trying to pump the price.
Insiders,
I don't know about insiders, but definitely, bankers coming in and trying to like move in and out of a stock and make a bunch of money like pretty quickly. And so I think there are a few coming in all of these different ecosystems that are going to be really solid. I think like what Tom Lee, for example, is doing for ETH, really great. Obviously what, MicroStrategies has done has been good for Bitcoin, I think. You could easily say that. So I think that like with everything, right? Like any kind of popular new way to do something, there's going to be a lot of people that come in. Some of them will be a little bit grifty. Some of them are just going to fall on their face just because they were unlucky. And then some of them are going to be like a very small number of them are going to be really important, and really impactful. And going to teach, like for Solana, one of the things I'm excited about is a lot of these DATs are digital asset treasury companies are going to issue equity on chain on Solana mainnet. And I think for capital markets, that's going to be really huge because internet capital markets are 24/7 global access to liquidity at the speed of light. And you don't have that on the NASDAQ or anywhere else, right? You just can't get that. And on top of that, it's composability with DeFi and for equities. registered, SEC approved, totally regulated. And I think that's going to be a really good thing for the market. I think there will be some traditional players who lose out on that because of the shift towards being on chain and access to DeFi and composability, a new infrastructure. But for companies and builders and entrepreneurs and shareholders, especially shareholders, I think it's going to be a boon. And I'm excited to see that play out over the next year or two.
Yeah, well, I like the reminder, the call back to the why and like the intention of these things, just like knowing, being very purposeful in what they're doing.
100%. Well, hey, thanks so much for coming on the show. I appreciate your time.
Thanks, Alex.
All right. I'll talk to you soon.
See ya.